All right. Hey, everyone. Mark here. Thanks for joining me for another Greenbridge Investing market analysis. Right, hold on. Let me just adjust my microphone. Let me know if the sound is okay. It should be. Or let me know if it's not okay. How about that? All right. So again, thank you for joining me this afternoon. In this session, again, I want to talk about what's going on with Bitcoin. We're going to address the stock market, especially after that trade of the week that we sent out earlier today by the market open, and then a quick look at gold and the dollar situation. Okay, so again, if you're new to the chat, make sure that you put the symbol or the market that you'd like to see in the chat now, so that when I get to it, I can answer your questions more quickly. Also, one symbol per person or per question, so it's fair to everyone else. If you have a second symbol that you'd like to see, just put it in a separate question, okay? All right, cool. So let's get this started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Okay, cool. So let's get into this. And by the way, we've received a few emails about our membership not receiving texts and emails, and I've been trying to solve the problem myself for a while. But obviously, it's beyond what I can do. So I've brought it to our developers, and they're working on it. So if you're one of those people that's not receiving a text or an email, but you're receiving the trade of the week, it's something with with the programming. So they're on it, and they're going to have it fixed. I would ask to please just be a little more patient. I know you've been very patient up to this point, but I just ask for a little bit more patience while they get to it, because again, they don't exclusively work for us, and they got to put it on their schedule, and you know how that goes. But anyway, they're on it though. Okay, so thank you again for your patience on that, and thank you for bringing that to our attention. Okay, so let's get into Bitcoin first. And again, if you have questions, I see some people putting some questions in the chat, so great. Put your questions so then I can get to them here in a moment. So the Bitcoin situation now. On the show yesterday, we talked about a bullish pin bar that was developing. Remember the bullish pin bar over here? Let's make this chart bigger, and let's see what's going on here. So we saw the bullish pin bar. In fact, an Ethereum trade was sent out in the evening based on this situation right here. Now, it actually took out the high of the pin bar, right, which was basically, right, just slightly took out the yesterday's high, or the high of the pin bar, and it gave it back right away. All right, so sometimes you can get caught in these situations if you put your buy stop just above that high, or maybe slightly higher, or whatever, taps you in, and then it does this. This is not what momentum should do if it's going your way, right? It should not give back the whole pin bar. So this is definitely a bearish sign. Now, this is why, again, it's very important to use buy stops with this type of strategy to help filter these out. Doesn't always work though. Sometimes it taps you in and then goes straight to the stop. That does occur. But a buy stop can help filter out these things compared to just stepping in just because there's a pin bar there. Oh yeah, a pin bar, I'm just going to buy it. Okay, so you have to be careful with that. Now, here's the other thing I need to address. With all the, oh, there's Schwartz. Hey, Schwartz, what's going on? I was looking for you the other day. Or I was saying, hey, where are my Romanians? Now, I had other Romanians come in and represent Romania, but you weren't here, so I was sad. But I'm happy now. Okay, so anyway, with this Bitcoin situation, what you're gonna get a lot of chatter, and you're gonna get a lot of talk, a lot of drama. Bitcoin's going to 20K now, and all this other nonsense. Or Bitcoin, what a crazy move on Bitcoin, and all this and all that. There's nothing going on here. There's nothing going on here. Yes, it's a red candle, but we haven't taken out 30K yet. Okay, as bad as it looks, it may take out 30K on this move. It's possible, but it hasn't done it yet. So what do you do in this situation? Well, if you're long from a previous trade, you should have a stop. Okay, if it's a swing trade, you should have a stop. If it gets stopped out, just accept the stop. Okay, that's the first thing to protect you in case this does break and goes to 26K, because that's where the next support is. Okay, 26K. Between 28.5, which is this low, and then we have 26K. Now, there's nothing here. We can't sit here and make the judgment that says, oh yeah, it's definitely going there. because there's been so much support for so much time. It's still possible to see a higher low develop, like which what we saw was trying to develop yesterday. Now, again, people come up with all these rationales like, well, the GBTC thing, they're going to have to unload all these coins and it's going to depress the price and blah, 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 blah. Right. All that stuff, like I said the other day in my original stream, my previous stream, those are just layers of complexity. Pay attention to the price and how price behaves around levels, right? That's really the main thing here. We do have a level, it's 30K. We have to see, what if this current candle, we still have a few hours before it closes. What if this thing turns into a pin bar? It's possible, right? So that's why you can't react to this. People love to react. It's human nature to react. Don't react. You have a stop in place, get stopped out. Or if your stop is a lot lower and you don't like it, well, you should take the loss then if it's a smaller loss, and if it turns right around, you have to be prepared to get back in. It's usually not a good idea to do that, because you can, if you do that and you get in the habit of doing that, you can overtrade and just churn, right? So it's like, just let the market decide. That's the best thing to do. That's why I'm not sitting here over dramatizing. So, okay, it's definitely going to 26K like all the other fake gurus say, right? None of that stuff. So just keep that in mind. There's going to be a lot of that talk. Ignore it. Let Bitcoin prove its point. Now, in the same situation here, all these altcoins, right? Like look at Ethereum, right? They're all looking the same way. Okay, I mean, look at Litecoin. Where's Litecoin? Look at Litecoin, right? Same junk. It's the same garbage. It's all the same. So that's why you can't jump to conclusions. You cannot have opinions, okay? Especially when it's short term. We only have two levels to look at. So 30K and 38K. Those are the levels. So either Bitcoin takes out 30K or 28. We can say 28.5 if you want. Takes that out, then we're likely to see 26 or maybe 20. But it's got to take it out first, okay? Or this thing turns around somewhere between here and there, and we take out 38K. It's asking why is really the wrong question to ask of the market, because there could be a million reasons why, all right? And one of the worst things is you grasp for news. I have to address this again. I've talked about it before, but news is not the answer. Now, you ever hear that phrase, everyone is a genius in a bull market? That a lot of times has to do with what? Logic and news, because the market's bullish, the market's going higher, and what do you know? Positive news comes out regularly. All these companies like, whatever, have to buy, if they just put 1% of their savings into Bitcoin's got to be 100,000 in 3 months. I mean, it just makes sense. That's the kind of nonsense they were talking about 6 months ago, or even like 3 months ago, right? You turned on the news, Bitcoin made new highs today. That makes sense. That's logical, right? Oh, it's at 64K. It's going to be at 100K probably in a couple weeks. I better buy some now before I miss out. That's the herd mentality. No one was saying 30K. Now this thing is struggling to hold 30K. So follow the levels. Follow the price action around those levels. Forget outside sources of information, especially if they are free, if they are on the internet, if they're used for marketing purposes. They are not there. They provide no real value. It's a coincidence if they work. So that's what you need to realize. But, with human nature and an overestimation bias, we think, well, yeah, see, I was smart enough to put that puzzle piece together, the logic, it worked out. And yeah, look, I made money. Yeah, great. So it reinforces those bad habits. And then we're in this situation, and I better grasp for the news because the news is helpful, right? And now it's a mess. Now it tries to go, it doesn't go, it tries to go, and it becomes very confusing. What happened to all that great, to the party that we were seeing 3 months ago or 6 months ago? So that's what you have to realize. Now, bigger picture, again, not much has changed here. That's generally a bullish trend, the bigger picture. So anyone that's calling for bearish, they're probably looking at time frames that are way too small, all right? This carries more weight. We have to see where this thing goes in light of this trend. Forget your 5-minute charts with Bitcoin. They're irrelevant. They carry no weight. So that's what we have to keep an eye on, okay? Don't lose sight of that. That's one of the purposes of why I do these analysis streams, is to give you that perspective so that you don't get caught up in all that hype and all that other nonsense, which can sound convincing, especially if you're at the mercy of the market and you're emotional. You'll take any news that's going to support your position, whether it's true or not, or accurate or not. It's just you're looking for something that sounds and feels good. Okay, so and then separate yourself from that. All right, anyway. So that's Bitcoin. Let's talk about the stock market, because we have some questions here, and I know there's been people asking about the trade of the week. Sent out trade of the week earlier. We talked about it on the show yesterday, selling the NASDAQ short. I sent it out before the open today. The price was 14,850, yesterday's low. Took it out dramatically. Now here's the thing. It took it out like around the open, and then it went back above it. Okay, went back to 14.9, and then it went and took it out again. So there was plenty of opportunity to get into this short. Okay, now this thing's at 775. So I see a question here in the chat. Is it still? The thing is, now you're taking a lot more risk. Okay, so I would say now is not a good time, because again, we're in from 850, which is a lot higher, and we risked 150 points or 150 pips in that scenario, which was a lot, right? So 15K is to stop. In this case, if you're shorting it now, you're risking a lot more. So while the reward risk is generally good, for the bigger picture, this thing can easily develop a green inside bar, tomorrow, especially the way this non-pullback stimulus-filled market has been for so long. I mean, look at this, right? Just longs after longs after longs. So this candle really hasn't done anything yet. It's just we managed to take a position that offered a good reward risk. All right. So what I would say is wait, see if you could get that bullish pin bar or some kind of inside bar, something like that, develop, and then look for the low of that. I think there'll be another selling opportunity with better reward risk if you just wait. Especially if 15K or almost 15K is tested again, we may get the lower high situation. So that's what I would wait for. Don't chase this thing, okay? Because especially this thing. This is not a bear market, and this is not a bearish trend. So if you're shorting into this, into a low within a bullish trend, the chances are it's gonna, you're gonna get caught in a squeeze, okay? So the trade that we took on the CFD, or that we sent out, it was super aggressive to begin with. So don't chase this. Okay, that's my answer to that. Do not chase it. Now, we had a question in our chat about, the Qs or other instruments if you don't have access to CFDs, because not everyone has access to CFDs. And I mentioned the Qs in the email. So here's the thing. In this type of situation, what you have to do is you have to look at the QQQ chart, right? And basically, our premise was based on yesterday's low, all right, on the CFD chart. So you have to go to the Q chart, and you have to look at yesterday's low, which was 362.22. That's going to be the level that coincides, okay? I mean, again, you can't chase this now, but you would have to, that would be your buy stop, and your stop loss would have to go above the high, which is what, 365.5? Maybe you put it at like 366 or something, a little bit higher. That's where your stop would have to go. And that would be equivalent to the 15K level on the CFD. So you have to be able to put those puzzle pieces together, right? And then, your targets in that situation would just be relative to your risk. So in the case of this, if you sold the 363, what is that? 363 even was yesterday's low. I'm sorry, 362.22. So let's just say 362 even, right? Let's just say that was the buy stop, okay? It's good to use like the whole number like that in that case. And 365.5, we'll say 366 would be where you put the stop loss. That's 4 points. So your first target should be 4 points lower, right? Your second target should be another 4 points lower than that, okay, and so on. So that's what justifies your reward risk. That's how you'd have to put a similar trade together. Now, maybe you're confused by that. Maybe you don't have enough experience to relate the two charts. If that's the case, don't force it. No reason to chase these things. Like I said, we'll probably have another opportunity. Look at this situation back here on the Qs, right? That's a double top. So we can still get something like that. Here we have a failed high, which again, this isn't too surprising. I've been extremely cautious and trying to find a short in this market since we broke 14K, okay? I think, just my opinion, which doesn't matter, my opinion is all of this bullish blah, blah, blah is nothing but hot air, okay? A lot of hot air in the FANG stocks, and when that hot air comes out, you know, this thing can touch 14,200 or 14K relatively quickly. I mean, we're almost halfway there in one day, right? I'm exaggerating a bit, but still, we made a lot of progress in one day. It took, what, a whole month or whatever for it to work its way up there? And in one day, it gives like, what, 25% of that back or whatever? So that's the nature of a weaker type of price action. People sell out of fear faster than they buy out of greed. That's just a market phenomenon. So anyway, that's how you'd put something like that on the Qs together. Again, don't chase these things, all right? What I'd anticipate for the Qs, the next short signal may be, you know, we pull back a little bit more, we pop up, and we get basically another one of these formations right here, okay? Another like lower high situation, and that'll be an opportunity to get involved. Like I said, this is a highly aggressive trade and it's counter trend. So like we said on the show yesterday, when they pay well, but it's very common to get stopped out a few times, right? This is not like an easy, oh yeah, trend following trade. It's not like that at all, and it can be very hard on the psychology. So just wait, be patient. There'll be another setup, I believe, especially like I said, in this market where it's forever stimulus and they're always pumping more money in and blah, 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 blah. The market will find some excuse to try to go higher again because everyone likes a higher market. Okay, anyway, so that's the Qs. Now let's take a look at gold real quick, all right? And again, thanks for the questions. Okay, so now look, here, the gold situation is kind of strange, right? So look at gold. I mean, today we're getting a doji, some indecision, blah, 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 right? Not a good place to be buying gold at the moment. Better off waiting if you're not into anything. But this is what catches my eye about gold. It's not the gold chart, but, you know, I look at other things like the dollar index, right? Very important that you look at these things. Look at the dollar index. So we're getting a bullish inside bar. That's interesting. So gold is a little indecisive. Hasn't really pulled back in the face of a rising dollar. Okay, so dollar wants to go higher. Okay, whatever. But then in context of what though? So let's take a look at the bond market, which I was saying yesterday. The bond market is pretty much the thing that leads a lot of things because interest rates are, you know, a key factor in a lot of components of the economy. So whatever goes on with interest rates can affect a lot of things, right? Now, we have a strong close on the 10-year note. What is this all about? So rising price means lower rates. Lower rates should be bearish for the dollar, not bullish. So what's going on with this, right? So we have strong bonds, which obviously it's the inflation scenario. And then when you look at the dollar is trying to go higher. That doesn't make sense. Okay, that's a red flag right there. So are the bonds going to break out and eventually the dollar is going to have to realize that interest rates are not in its favor and start breaking supports? What is supporting the dollar right now? Right? So the thing is, you know, I'm asking logical questions. These are the wrong questions to ask because there may be some hidden factors that the smart money knows, okay? Maybe they know something about the Fed. Maybe they have some inside information. Maybe they're anticipating, you know, more of a hawkish stance from the Fed before the Fed has said anything, or whatever it is. There could be some hidden inside information that's not publicly available that they're betting on. Because when it comes to the dollar and it comes to bonds, those are large institutional players mostly moving those markets. It's not little retail traders that don't know anything. Okay, it's usually banks, governments, hedge funds that have a lot of money. They usually know something because they can afford to know something, right? So that's when you look at these institutional markets, right? Those are some clues there. So what's the story here, right? So whatever the story is, the market needs to figure itself out. This is conflicted. And with the rising bonds, right, and the stock market sells off on that, with the lowering rates, you would think, hey, inflation is good for the stock market. I don't know, the stock market doesn't like it today. So again, you can't sit there and ask why. Let the market figure it out. Look at the levels, look at the price action. We didn't send out that short idea on the NASDAQ because I was sitting there putting some kind of economic puzzle together. We sent it out because the level made sense, the price action made sense, and the reward risk made sense. That's it. Okay? So that's really what goes into a short-term swing trade mindset. It's not all this complicated stuff that people think. People are asking me all the time about, oh, what about the BTC long-short thing? What about this other thing? What about that thing? What about this thing? If those things offered any value, they wouldn't be available, for one. Okay, and for two, you don't need all that information. Your goal should be to make decisions on the least amount of information possible. So what you want to find is the most valuable pieces of information to make those decisions on. And a lot of that comes from price, nothing else. Okay? So anyway, so that's the dollar and the gold situation, all right? And here, let me go back there. So the gold situation. So that brings me back to this. Dollar going higher, gold is still green today, right? Gold should be red. So what's the story, right? Are they anticipating? Gold is telling me the inflation scenario, but the dollar is telling me something else. Again, the conclusion, let the market figure it out. Until then, our goal is to mitigate risk. And when things don't make sense like this, you don't jump in on your opinions. Opinions don't matter. They don't matter to the market. They don't matter to anyone. They only can cause you to lose money, and they're only right randomly. So what good are they? So the thing is, there's nothing to do with gold. Now look at this, AG. This is a swing trade. This was a trade of the week. Got stopped out. This is AG. It's silver. The whole premise behind this thing was if gold rallies, which it rallied, silver should rally too. This thing went to its stop. Doesn't make sense in terms of logic, but there it is. So like I told people yesterday that were asking about the stop loss in AG, take the stop. If it goes to the stop, take the stop. It has no business going below 14, and it's below 14. All right, that means there's a problem. Whatever the problem is, we don't know what the problem is. It doesn't matter. It means that there's a problem, okay? And it shouldn't be this low. So that's that. You take the stop out, and the premise is over. Don't fight these things. All right, so again, that's an example of trying to use logic to try to justify something. Logic is not for a highly random and abstract environment like a financial market, although the whole world seems to think that there is a connection there. All right, I mean, that's what mainstream news is built on. It's built on stories and logic and overestimation bias. People think they're much better at these things than they actually are. The markets are random. They're highly random. So anyway, let's talk about some questions here. I mean, that's pretty much the things I wanted to cover. So let's get into your questions. Oh yeah, on the Qs, on the Nasdaq situation. Here's another instrument. I didn't write about this because I didn't want to confuse people, but this is the SQQQ. I took an options position on this thing a few months ago, and basically $250 a contract, and that thing is like 90 cents right now. So, but they were basically almost a year out, so I still have some time, and I'm holding on because I think we can break even on those options. The thing is, forget the options because the time decay is too high on these things. But you can buy the ETF. All right, this is an inexpensive way to basically short the Qs. So if you buy this thing, this is the ProShares Ultra Pro Short, meaning if you buy it and the NASDAQ goes lower, this thing goes higher. So it benefits from the short side. Now keep in mind, this instrument is highly speculative, and a lot of times you just lose money with this, right? The NASDAQ needs to make a very significant move for this thing to really go somewhere, right? The NASDAQ today just started, but we need that NASDAQ to pull back like 1,000 points or more for this thing to really get its move going on here. But if you want a cheap way to get into something to benefit from the short side, I mean, look, you got plenty of room here. Where would you stop going something like this? 833. This thing right now is at 871. That's 50 cents. That's not too bad compared to using the Qs or the CFD itself. So, but like I said, you need a significant move. So this would be a more appropriate instrument for anticipating a much bigger move in the NASDAQ, which we may be at the beginning of, but you have plenty of time to get into these things. It's not like you're going to see a huge move and huge candle in this thing tomorrow. Like I said, the NASDAQ may fool around, pop up again, give us another lower high before we see more of a persistent bearish structure develop. Now notice I'm not calling it a bear market because we're very far from a bear market. There's nothing right now that says bear market. Nothing. So all we're looking for is a healthy pullback in the Qs. And that's all we've been looking for. Like I said, it's a gamble. It's highly speculative. Just looking for that high reward risk pullback. Bear market is a completely different story. So don't get the two confused. All right, so that's it. Let's see what kind of questions we have here. So Wedge, it's good to see you. Jesse, of course, from Poughkeepsie. Thanks for joining again. Keep preaching to me. Stay focused on the risk. Okay, cool, Jesse. I'm glad you're getting something out of that. Again, it is all about the risk. Taz, okay, so I answered that question. Shay Shank, hey, good to see you. Shorts, of course. What do you think good time to buy more ETH and BTC? Okay, so Schwartz has a question here about BTC, my Romanian friend there. And so now, as far as bigger picture, forget the swing trade, because the swing trade, we have a trade that was put on a few weeks ago. It hasn't gone to the stop yet. It's just, so there's not much to do there. There's no buy signal in place right now. So you can also consider this from the position trade perspective, meaning inventory, more of an investment, longer term. Is this a bad place to buy? Look, you're buying into weakness. Buying into weakness is never a bad thing to do when you're thinking long term, meaning you're thinking to hold on for a year or two. But the key to doing such a thing is sizing. I talk about this. I've spoken about it a lot. I'm sure many of you have heard this before, but I'll repeat it again. So if you have $1,000 to invest, and that's all you have, you split that into 10 $100 increments, and then you're going to spread that $100. You're going to have 10 buy orders of $100 worth. Okay, so you want to buy every time this thing pushes a new low, and you want to buy $100 worth at that situation, you could do that. But instead of using charts in that situation, a lot of times it's better to just use time. So you can buy the 1st of the month and the 15th of the month, right? 2 purchases. So that means over 5 months, you're going to make your 10 purchases and you're going to have an average price. So here, you're not buying highs. This isn't 64K. You're near 30K. So these are not bad prices for inventory. The mistake you need to avoid, though, is getting too big too fast. That's the common mistake. So people will see this, well, I got 5,000 to invest. I'm just going to throw it all in. That's big risk, because now if Bitcoin goes to 20K, you watch your 5,000 turn into, 3,500 very quickly or whatever, right? And and then that makes you scared. You make emotional decisions. Well, I can't lose this whole thing. My wife will be so mad at me. So you bang the whole thing out, right? You take the $1,500 loss and you just banged it out at the bottom to someone that's buying in small increments, okay, and institutional buyers. So that's why you need to really carefully consider the size in those situations. Now, if let's say you have your $1,000 and you say, okay, I'll split that over, 5 months and I'm going to buy $200 a month basically, okay? And as the 5 months goes on, Bitcoin goes to 20K. Bitcoin goes to 15K. You're buying better prices, okay, without getting in these situations where you're overexposed or you're emotional, because you're just buying inventory at good prices rather than buying inventory or getting really big at bad prices like many people were doing a few months ago. Why were people doing that? Because fear of missing out, all those psychological reasons that I've talked about, watching too many YouTube gurus who have no idea what they're talking about, like a lot of that stuff, because people are looking for hope. People love hope, okay? A lot of websites and a lot of organizations their business model depends on hope, because that's what they sell. I don't sell that. So that's what you have to keep in mind for that type of thing. Same with ETH. Like remember, Bitcoin is the leader. So whatever Bitcoin does, all the alts are going to follow, right? We saw ETH earlier. If you look at like something like Litecoin, it's the same deal. Okay, you look at something like, let's take another altcoin, something like Theta. All right, Theta. And I mean, look at this. I warned people about this. I said if Bitcoin breaks the supports, I mean, these things were acting relatively weak. They're just going to get weaker. These things don't trade on their own. So that's why I would always not really encourage buying inventory in these things. If you're going to do it, you might as well do it in the leader, not these garbage coins, because they don't trade on their own, and most of them don't have a true value proposition. Okay, they're not proven yet. Some of them will prove themselves, many of them won't. So something like Theta. What's another one that's been very popular? Let's check out, what is it, AXS This one's been going berserk. Look at this. So this thing made a high of almost $30 today, right? $30. Now, just about 2 weeks ago, this thing was at $3. So people were asking me about this, and again, I suspect that there's some hype going on somewhere. There's a chat room somewhere, whatever it is, right? People that bought at this consolidation area, people that bought there because they bought early, this was their lottery ticket, okay? And hopefully they're getting out and taking profits, because especially in the face of this pin bar. That's now, of course, there are some people that are probably going to be stuck at that high. That's it. That's how these things work. Now, I wouldn't be surprised over the next few weeks if this thing is back to like 15. Okay, what's this high over here? 10. I wouldn't be surprised if this thing is back testing 10 over the next month or two. People that think that this type of momentum is realistic and sustainable, they don't have enough experience yet to realize that this is a joke. This is a lottery ticket, right? This is not sustainable. It occurs, but it occurs, this does not occur normally. So trying to go for these moves, trying to be in something that does this, basically requires you to be in everything, right? And then eventually one of these things go and you have to take your money. Meanwhile, all the other ones that don't go, you can take losses in, right? You're not going to pinpoint the one that's going to do this unless you're an insider and you're into this thing very early. All right, anyway, so that's the thing with those. Don't be fooled by these. Another one too, like Andrew was talking about, like Kava, right? Kava. All right, that one didn't go anywhere. There was another one someone talked about, Comp. I mean, look at Comp. This one was getting all exciting. People were talking about this a week or two ago in my stream here. They're like, oh yeah, check out Comp, blah, blah, blah. Yeah, see? So that's where AXS or whatever that one is called is gonna, that's the cycle. So anyway, just wanted to point that out. Now, so let me see what other questions we have here. I appreciate everyone's questions. Man, that whole answer was just for Schwartz. All right, Shayshank, Bitcoin is in no trade zone. Well, so Shayshank, I think I addressed that too. I mean, it's for swing trades, there's nothing to do here. There were a couple of trade signals. Clearly it's not working. You don't want to keep forcing trades. You know, on a day trade time frame, which is completely different, sure, there's plenty of things to do on a day trade time frame, but you need to understand the risks and how to control yourself in such a time frame. So, you know, on the day trade time frame, that's where shorting isn't a bad idea, because it's possible to make a few hundred points very quickly on the short side. But again, where do people make the mistake on the day trade time frame? They go into it thinking, well, I'm going to make 2,000 points in this day trade, but that's out of proportion for that time frame. So now they think they're going to get that profit target. They put a stop that's too tight. They get stopped out a lot. So okay, screw the stop. I'm not doing the stop anymore. I'm just going to, you know, let this thing do its thing, because every time I get stopped out, it goes to my target eventually, right? Okay. And then it's the one time you get caught on the wrong side. So you cannot play that game. Day trading, that's why people ask me, can you give me tips for day trading or blah, blah, blah. And my first tip is don't do it. That's my tip. Don't day trade, because if you're new, you cannot compete with the random nature of the market, which for one will drive you crazy with a lack of experience. Number one. Number two, the professionals that are in this, that have years of experience, you are not going to be able to compete. So what will typically happen is you're going to react to things at the wrong times, and you're just going to keep losing money, especially with the costs that are involved in some of these things, right? So stay away from it. Paper trade. If you want to day trade, paper trade, and work on that for a while. Realistically, to get good, and that's assuming you have a mentor that's holding your hand the whole time, I'd say it takes between 3 and 5 years. 3 and 5 years. And that's doing it basically full time or spending a lot of time with it and having a mentor focusing you on the right information. And I know no one wants to hear that. They want to buy the dream that, oh yeah, I bought this training program for $2,000, and the dream is they're going to teach me how to day trade in 3 months, and in 3 months I'm going to be good enough to make $1,000 a day, right? That's the dream, but that's all it is. It's a dream. No one after 3 months. Now, we saw an environment not too long ago where you had these kind of people making a little bit of money and all bragging about it because the market was nuts and the moves were there. But once the moves go away, the party's over, right? And that's when the hard money, that's when your skill and your experience needs to come into play. And if you don't have it, then you're just going to lose whatever you made anyway, and you're going to quit. That's the typical cycle. You don't want to be one of those. So that's why I said stay away from that, and stay away from these guys that are pushing these $2,000 training courses. Now, is education a bad thing? I don't discourage education, but just understand the limitations, right? The dream that they're selling is not real. That's what you need to realize. All right, so anyway, enough of that. Let's talk about, so that's the question there. Let me see, Julio from London. Hey, Julio. So, it was funny. The other day, I wanted to mention this, and I forgot to mention it, because London, the European soccer, I don't follow soccer, but the Italians won, right? And the Italians, and there were no UK people in my stream on Monday. I was like, oh, I wonder why. Not one person. Hey, I'm from the UK. Not one person, Julio. But anyway, I just thought that was funny. I don't care. I don't follow soccer. I just thought I'd mention it, though. Anyway, all right, so Julio bought your... cool. Appreciate that, Julio. So a note about the ebook, since Julio mentioned it here. I wrote that ebook for one purpose, and that was to assemble or document the techniques that I found to provide the most value compared to all the other junk that's out there. I've tried a lot of things, and a lot of things are they're useless. They don't provide any actionable value. So the building blocks that I put in that ebook, they're geared toward giving you a perspective, right? That's the first step. From the perspective, you can then build the strategy. You'll have the building blocks to build the strategy. Now, you're not going to get all that like from an ebook. I spent $10 on an ebook and now I can trade. It's not going to be that simple. But what I'm trying to do there is steer you the right way to focus on those topics more. So like, for example, I talk about specific candlesticks in that ebook. You should pursue those particular ones further and learn about those further. All right, that kind of thing. Or I talk about like support and resistance levels and that kind of stuff. You should pursue that concept further. But trying to go after something like, oh, well, I'm going to learn how to use like a stochastic and this and that and whatever. There's a place for that stuff, but before that has any relevance, you need to have a perspective, because it's all about context. And that's what people lack. So you could go on the internet right now and you can Google, trade strategy, blah, blah, blah. And you'll come across hundreds, if not more, of free strategies that lay out, oh, well, this stochastic here, this oscillator there, this over here. And when this crosses that, you have a buy signal, and it works 95% of the time. Blah, 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 blah. Okay? All of that stuff, if that was really true, of course, they don't tell you the sample size of how many trades were tested, and a lot of times they leave those details out. Like, I've saw some videos where guys were doing that, like, oh, I'm gonna test 100 trades, and then they were using that as their point of reference. 100 trades is hardly enough, especially in the recent market that we've had. You can't just go back when you back test. You can't just go back, right? Let's just bring up the NASDAQ real quick. You can't pull up a chart like this and go back 6 months and be like, oh yeah, look, my strategy was right 95% of the time. and it was a long only strategy, and yeah, made a lot of money on that. Right? Look at the market. Okay, I mean, look at this. How is that strategy going to work if you go into a range-bound market? That's why when you backtest, and of course they don't tell you this stuff, when you backtest, you have to have a random sample. What's it called? You have to have a random population of prices. You can't have a nice clean-cut trend like this because it's going to throw off the backtest. So that's what you have to realize about those things. So my point is, when it comes to stuff like that, without context, all that stuff doesn't really, it just lends itself back into the random nature of the market. That's why it doesn't work in reality. Because again, if there was any true value to it, an engineer will just take those rules and apply the system, build an algo, and that algo will trade, and whatever money is available based on that, well, it'll take it all out of the market, and it'll basically, when everyone else copies it, it will trade itself into uselessness, because there'll be no one willing to take the other side of that if it works so well, right? That's how the smart money, when they trade, if you talk to like a professional algo developer, I mean, that's the concept behind that. But a lot of times these algo guys, I'm not talking about the retail, the stuff you find like you could buy, I'm going to buy this robot for $100. I'm not talking about those. I'm talking about the guys that work for a fund. They get paid $300,000 a year to write a program that's going to trade. You know what they're competing for? They're competing for the place in the order queue of an order book. That's what they're competing for, speed. And then they move millions of shares, right? And they're trying to make a penny. So they don't look at charts. They don't waste their time with all this stuff. It's an engineering problem. It's really more of an engineering problem. And on top of that, a political problem. Because I saw somewhere that when you play that game, depending on who you are, will also determine where you are in the queue. So if you're Goldman Sachs, you're going to have preference by the exchange, which means a guy can put all this great programming together and this and that and blah, 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 and I'm going to be first in the queue and this and that, and then you're not first in the queue. Why not? You have a better program. Oh, but Goldman Sachs has a political connection. Oh, you can't compete with that. Okay, so those are advantages that only institutions can enjoy. At one time, a long time ago, day traders had that speed advantage at one time, but they took it away. So that's the way it works. Anyway, all right, enough of that. Let's get into some more questions here. Man, that was a really long answer. Schwartz, BNB and KSM were pumped today, while BTC, okay, they were going up, but guess they ran out of money. Okay, so Binance Coin. Let's take a look at that, right? BNB. So they were pumped, he says. Let's take a look at BNB. So here's Binance Coin against Tether. Let me just see. Can I just get like a BNB USD? Let's see. What do I have here? So, yeah, okay, I see. But this, you know what? Pumped. This is really not that impressive. So you have yesterday's pin bar, and you have a buy signal today, right, in Binance Coin. But Binance Coin is far from being a leader, right? I know that much. So a buy signal in Binance Coin, while Bitcoin fails to produce a buy signal without Bitcoin following through, is highly suspect. I wouldn't, I'd put very little faith into this, because if Bitcoin gathers bearish momentum and breaks, this party is going to be over fast, especially since you have a lower high. You're facing a lower high right here. So yeah, maybe they pumped it. And again, they have places like Binance or some of these chat rooms. If they have exposure to a lot of people, they can help push their price, their way a bit by pumping, like you said. But you cannot play that pumping game, especially for swing trades. If you're in a day trade and you're very early in on that and you want to grab something because of whatever, cool. I wouldn't be surprised if insiders are doing something like that, because they know what's going to happen before it happens, right, in terms of the pump or whatever it is they're doing. But the swing trade, all you're doing is taking it off their hands. So if Bitcoin doesn't agree, no good. So thanks for mentioning that. Okay, let's see what else we got here. So Shashank says BNB drama is on represent. Okay. So yeah. Oh, so Shashank, I think you just pretty much said the same thing I just explained here. So that's the thing. That's why you have to ignore that stuff. Right? Again, Bitcoin is the leader, and that does not look good. So if Bitcoin doesn't agree, like I said, some of these coins, occasionally they do their own thing. You have to wonder, how do they do their own thing? Like I said, they have a hypester somewhere, chat room somewhere, or it's a company like Binance, and they're pushing people to do something, right? They're stimulating people to do something, and you get enough people, you're going to affect the price, right? But if Bitcoin doesn't agree with that, then that party cannot sustain itself, because these things are all connected that way. So Bitcoin is not agreeing, right? And maybe that's because, maybe there's arbitrage algos or something. I don't even know. I mean, I can't sit here and explain the exact reason why they move together, but I don't question it. If that's the behavior that they've proven consistently over and over again, that's the behavior I'm going to go by until it proves otherwise. So that's the behavior. Bitcoin leads, most of them follow. Until you get, like I said, an occasional here, one or there, that lottery ticket hype, and it does its own thing. But that's not the norm. Stocks are a different story. Stocks tend to, there are certain sectors of stocks or groups of stocks that will do their own thing, right? That's why we prefer a lot of stock trades, even in the face of the risk that we face with the market, because they have the ability to shrug off the market and do their own thing. Okay, if BTC loses 28K, I think, well, so you're being a little dramatic there, I have to say. If it loses 28K, the next support is 26K. So that's not really that dramatic, I mean, and it can even go to 20K, it's possible. But I'm expecting support to reestablish itself at one of those levels, because those levels have been proven historically, right? That's where they come from. So, and 20K is a big whole number. So I wouldn't be that dramatic about it. I would just be waiting. If you're not in, nothing wrong with sitting back and letting the market decide. But what you want to avoid is not getting caught in any type of opinion. Because if you sit there and say, well, it goes to 28K, I'm going to short this thing. And then that may be a failed low, like it has done before. In reverse, it may go to like 27.5 and then reverse right back up in your face. Next thing you know, it's back to 35, right? Back into the mid-range point there. So that's why opinions like that are not a good idea, especially when you're fooling around near a broad higher low on a bigger picture bullish trend, which is what this is right now. So keep an eye on that bigger picture. I'm not going to say don't pay attention to the smaller picture, but you have to give it less weight, okay? You can't take it as seriously until it does something, until it changes the bigger picture. So Schwartz, okay, on YouTube, who tells it like it is and actually helps people with good real... I appreciate that. But you know what, Schwartz, I'm also the least popular. How about that? I'm the least popular. I mean, I can't even get 100 people to watch me on this thing. Meanwhile, I see some of those other channels, and they have like thousands of people watching them, thousands, and it's amazing to me. And I'm looking at them. I'm like, all right, I watch a video and I'm expecting something of value, and I'm expecting, okay, he's going to give me a level, he's going to tell me this, he's going to tell me that, and they provide nothing but hope and hot air and fluff and all this stuff that's useless. Okay, that I can't make an actionable decision on. Yet the guy's got 3,000 people following him, live. So that just goes to show. I mean, I don't cater to the herd. I don't cater to the herd mentality. It's always been my goal to provide clarity and actionable analysis based on what the market is saying. Okay, that's why people ask me my opinion. They always ask me, "What's your opinion of this? What's your opinion of that?" I don't have an opinion. The market gives me an opinion, and then I consider it. I consider the risk, and maybe I'll make a bet on that, and then maybe the market will prove me wrong, or the market changes its mind, and then if it does that, I have to readjust my opinion. So I really don't have any opinions. I just believe that markets are highly random, and you just have to go with evidence of things, right? It's about what you see, about what you don't see, It's about what it's doing and what it's not doing, right? Those are the ways you have to look at it. And you have to be able to distill this information in a way that's binary, meaning it's either this or that. And the market needs to answer the question. And the less information that you can do that with, the better. Okay? It's human emotion gets in the way. It gets in the way in a lot of ways. Even when you think you're not being emotional, it still can get in the way. So that's why I always discourage people from day trading, because that's where it's the worst. I know, trust me, I know. All right, so let me see. Hey, no problem. Even my rants are clean and BS free. I try. So Isaac, please don't stop streaming. Oh no, I'm glad people. It makes me happy that people learn from my streams, because I mean I don't want your time to be wasted. I mean, you're spending some time with me here today. I want you to get some value out of it. Okay. Let's see. People, what does Schwartz say here? People can't take the truth. Yes, Schwartz, you're right. People want to be lied to. I'm a big believer of that. I watch the YouTube ads, right? There are a lot. Whenever you watch a trading channel and they have the ads on, you see their competitor pop up, and they're usually trying to promote their special magical system or whatever it is that they're pushing. And they have the fine print on the bottom. And it's funny because you'll see the guy yelling and screaming about, you can do this and you can make money, and I have a big house and I have a big car and I have a hot wife and all this other stuff. And then you read the fine print while he's saying that, and it says the typical student does not make money in the system that you're buying here. So I mean, they're telling you right there. So I guess when you don't make money, you can't come back to the guy and say, but you said the big house and the hot wife, and I got none of those things, and I gave you the 2,000. Oh, did you see the fine print though? The fine print says a typical student doesn't make any money. Did you think you were better than the typical student? Well, that's your fault for thinking that, right? I mean, read the fine print. It's funny because it's in such contrast to the dream or whatever it is that the value proposition that they're pushing on you when you watch those commercials. I think it's hilarious. Anyway, okay, Isaac. Okay, no, I appreciate that. Okay, does not sell stories, right? I just look. Like I said, I want people to have a realistic view of the market, and I think you should have a more realistic view. You can't trust most public sources. Believe me, over the years, I've seen a lot of stuff, and I've seen a lot of experts say a lot of this and a lot of that and a lot of this and a lot of that, and it's all meaningless, really. The market is the one that decides, right? The market. So people come into this with an assertive stance. I'm gonna fake it till I make it. I'm gonna do this, and I'm gonna read hundreds of charts, and I'm gonna read books, and I'm gonna do that, and blah blah blah. And there's no advantage to doing any of that. All right, the real focus, if you want to become good at timing markets, you have to look where no one's looking. Okay, you have to do the opposite of the herd. You have to think of yourself as the opposite. So whatever the whole world is saying, you have to be suspect of it. I run into this all the time at Greenbridge. There'll be some, like, everything is hot. Oh, hot market. Oh, this. Oh, that. Oh, do you see the earnings from this one? Oh, yeah. Oh, they're going to go high. And I'm looking at the NASDAQ at the highs. And I don't know. I don't agree with it. I don't care how great things look. I don't care how optimistic things are. Those are all warning signs for me, because if you're not in from the great prices from 6 months ago or a year ago, if you're not in from those prices, you're buying now, or these experts come out now and they say things, oh yeah, I'm bullish on oil now, at the top, you're telling me now? I remember there was a guy on Bitcoin. I have the Bitcoin chart up here. There was a guy, we were fooling around 60K, or maybe it was around there, high 50s, low 60s. And the guy comes into my chat here, and he says, actually, I think it was on the TradingView chat, and he says, oh yeah, this expert that I watch came out and said that the bull market's just beginning. And I was like yelling at the guy. I'm like, at 60K, the bull market's beginning? At 60K? Oh, I haven't heard from that guy in a while. Anyway, but that's what I mean. Okay, so this is a mental game more than anything else. I'd have to say it's like a 95% mental game. charts and all these things that we do with the charts help us to basically help us do one thing, and that's evaluate risk. So we can decide, am I willing to take that risk or not? And what do I think the chances are of this outcome versus that outcome? And that's it, right? And you need a binary way, binary way to have a yes or no. Okay, yes, everything fits. I'm willing to take this risk. I go. Otherwise, if you go on feeling, which is what most people do, especially when they start out, you're going to have random rewards, and when things don't work out, you're going to trade more and trade more and trade more, and you're going to wipe out your account. That's just the way it goes, okay? So to avoid that, you can't trade the market. You have to trade rules, which is not the market. It's rules. The market has to align to the rules, okay? Okay. Oh, yeah, okay, so Sean asking about AG, and don't use volume in your analysis, or do you think, okay, good question about volume. Yeah, I don't use volume because it's pretty much, it's not very helpful information. Historically, volume is often used for like, oh, you know, higher highs on declining volume. That means it's going to be a short, or it's going to pull back. It can throw you off because it doesn't really mean anything. You have to understand something about volume, whether it's on, you know, like a Bitcoin chart, or like a stock chart. I don't have volume on my charts, but you know, you have like the volume histogram on the bottom. That information is not complete. You're getting a report from the exchange or the broker or whatever, right? And they're giving you some sort of aggregate volume. But what about like large clients or whatever that are doing business, you know, outside of the platform? Is that in the volume too? I don't know. What about hidden orders, right? Is that also going off in the ticker, in the time and sales? Is that going off or not? So that's why I think that they can play too many games with volume, and I don't. It's pretty much useless. I think that if you just focus on trend and levels, the only advantage we really have as a retail trader is really only one, and that's trend. That's all we got. Everyone else has a lot of other advantages, but we don't. We don't have deep pockets. We don't have information. We don't have politicians in our pocket. We don't have any of those things. So we have to rely on trend, and volume isn't really going to help us with that. Okay. I think at one time it had more value back before everyone had all the information that they have today. So thanks for asking about that. Let me see what else we got here. Okay, so Sean's asking about AG. Yeah, I mentioned AG earlier, but I'll be happy to mention it again. So AG stopped out, and that's it. Like I was saying, leave it alone. This thing has no business being at 1393. This thing shouldn't have broken 14. So 14 was a pretty heavy-duty support, and you know, maybe at some point it'll give us an opportunity to get back in. But with gold, that had that nice move yesterday, trying to push a little higher today, and all that kind of stuff going, what is AG doing here? So that's a red flag. So you stopped out, leave it alone. Leave it alone until it shows better structure, especially in light of this recent gold move. The whole premise of AG was based on the gold move. I was expecting gold to go higher, and I figured, hey, if gold goes higher, silver should follow like it usually does. And AG wasn't having it, right? AG is like, nope, not following. I'm going to break support instead. And that's, hey, it happens, right? That's why we use the stop. Respect the stop. That's it. So I'm not getting back in anytime soon until I see some kind of improvement there. But it's just not there at the moment. So thanks for asking. Isaac is asking about ETH Bull. On one of the most insane charts I've ever seen. What is that, ETH Bull? ETH Bull, is that one of those, is it a token? 3 times long. Oh, this is like a leveraged instrument. Is that what that is? What is that? Is that a leveraged instrument? So this is a ETH Bull. This is 3 times long. You mentioned 6 times. Yeah, they come up with these leverage instruments, which are basically gambling instruments. You know, probably great for day traders if this is on like one of those exchanges like BitMEX or something, maybe it could be worthwhile. But trying to swing trade that, forget it. That can lead to a lot of problems right there with those kind of dramatic moves. So yeah, that's great for intraday action, especially if it's like 3 times leverage or 6 times leverage. Whenever they're multiplying those leverage like that, it's for retail traders. It's for smaller retail traders. Large players don't play that game. And the other thing is, often with those type of leverage instruments, especially if it's like a Forex broker that's offering it, or something like a BitMEX, most likely they're on the other side of those trades. Most likely, because they know that the general population will do the wrong thing. Because they know that the general population of retail traders is more emotional than anything else. They know this. So they're willing to bet, even if they're wrong. Yeah, sure, they're going to lose money, just like a casino loses money. But a casino, over time, does not lose money, right? For every dollar that's bet, they win, what, like 4 cents or 4 pennies or whatever it is for every single dollar that's bet. That's the advantage that they have. So they want you to stay and keep gambling, and here's some more drinks, and here's some food for free, and here's a free room. Just keep gambling, right? So it's the same type of business model. We just think we're more intelligent because, I'm in a 3 times leverage instrument. These aren't poker chips. This is intellectual stuff, right? All right. So let me see. Shashank always says step aside when hype is on. Yeah. 3 leverage token, odd instrument. Yeah. So like I said, those are really set up for retail traders. It's a great product for the exchange because they make some nice money off of that, right? That's why they give you the leverage. They're not doing it to help you out. They're doing it because, especially if they're on the other side of it, it's a nice instrument. So you have to be careful with those. I think they're good instruments if you know what you're doing, and you know how to work on those smaller time frames, and you understand the risks that you're facing. For a professional trader. But for someone that's new, bad idea. Or someone who has no experience day trading, but they see the movements and they're going to try to play that game, it's a bad idea because you're going to get caught in the random nature of it, and you're going to think you know things that you don't know and all that other stuff, and your mind will play tricks on you. That's just the way it is. Okay, I'm in SQQQ based on the CFD trade. Oh, cool, Sean. So all right. What did you take that because I mentioned it in the chat room earlier, or did you take that on your own? Because I was talking about that earlier here in the stream, and I was saying it's a good alternative if you understand what you're dealing with here, and you understand that it's going to require a significant move on the NASDAQ to really get this thing going. But hey, you want to try something out, it's worth a try, as long as you understand the nature of the instrument. So, Shashank, when hope is finished, come around, take your profit. I appreciate that, Shashank. Yeah, Shashank's been following me here for a while. Right. So that's the nature of this game. So let me see what time it is. Yeah, I'm going to wrap this up here in a few minutes. I just want to mention a couple of things. So, look, there's a few schools of thought, right, when it comes to this kind of thing. There's the reactive, which you'll find everywhere. Everyone's reactive. Oh, this is doing this, go short. Oh, this is doing this, go long. Oh, big news over here, blah, blah, blah. Right? That's reactive. And that's something that appeals to the retail trader. It's exciting. It's gambling. I mean, look at some of these platforms. Look at like Binance. When I looked at that platform, I was so turned off because of the stimulative nature. As a trader, I don't need to be stimulated. Okay, I don't need all these flashing lights and bells and whistles, and I'm not playing a slot machine. All I want to know is I want to be able to see some pieces of information. I want to see my position. I want to see my P&L. Certain things I want to see. I want to be able to place my orders pretty quickly, pretty easily, with no complexity, right? Very simple things, very simple. My platform should be clean. There should be nothing on it. But you see all these crazy things, right? And all this information that's useless on there. And that's there for a purpose. It's because it stimulates reaction. That's how our minds work. Like a slot machine, it's the same idea. So, my point with those things, this is all about controlling yourself. Really, that's what this comes to. The only thing we can control is the risk, as we know. All right, that's all we can control. We don't know where the market's going to be in the future. No one knows. You have all these big experts, all these big mouths, like again, all these gurus here on YouTube with all their predictions and this and that. And the random nature of the market will either make them right or wrong. They know that. They probably don't even know. They just whatever, right? Whatever that they're following. If they're right, hey, it works out great and they get more followers. If it doesn't work out, well, we'll just blame it on the market, right? But going into this with that type of stuff, that type of school of thought, reactive, having some kind of prediction, having some kind of philosophy, something that's going to keep you stuck with one mindset is bad. It's bad because this is a random environment. So, as a market timer, for one, we need to be flexible. You need to have an open mind, okay? Now, when we can identify a trend, and that trend is clear, okay, cool. Then we can think on that track. Fine, until the market proves otherwise, right? But we always have to be open to those changes. And we need to know how to define those changes so we know what to look for, right? Like I always tell people, like something like, let's go back to that AXS chart real quick. I always tell people, if you buy this thing on a breakout, right, AXS-USD, you buy this thing on a breakout, and the next candle, or the candle that you bought as a breakout, turns into this, a pin bar, or the next candle, tomorrow's candle goes a little higher and closes red, right, a little higher, and gives you like a red candle, kind of like it tried to do that a couple of times here and only went higher. But at some point, that's going to stick and pull back, right? Just like if you look back here, tried to break out, next candle's red. So that's what I mean as far as looking for something that should not be there. Something that should not be there is that. Now, does that mean you react to it right away? Well, no, but you should be prepared in case it follows through. Why do I say you don't react to it right away? Because you can have this situation right here. It turns red, but it's an inside bar, and then it takes out the high and goes higher. So that's why reacting is not a good idea. You have to have everything sort of pre-thought out, just like our trade of the week, okay? I used, here's the chart that I used, right? US Tech. Let's see, US Tech. Here's the chart that I sent out. And you can see on the chart, that's the trade information on the chart. So if you notice, and I sent this thing out right before the open. And if you see, all the orders are predetermined. Sell stop, stop loss, and the targets, and the risk reward, right? That's it. So it's all thought out. The scenario is all thought out. Everything is figured out. There's no reacting here. Either this thing goes to the sell stop, which it went there 2 times at least. That's it, right? So that's what I mean by like rules based. Once this is out, right? Once I put the orders in, now it's up to the market. I'm done making decisions at that point. Now maybe the market will give me some different information in a few days where I can adjust possibly, but until then, I mean, my stop loss is there. So I always have that choice to say, hey, if I'm wrong, it goes to the stop. And usually that's the better choice, usually. Okay, so I just wanted to leave you with that. It's about rules and not reacting. Have your orders in advance. That's why we send out trade of the week. And you have, your orders pretty much, we send out our swing trades the same way. We don't send out market orders. On occasion, here and there, sometimes we have to. But most of the time, these orders are in advance. Right? One like GME, we sent that out weeks ago. That trade took like a week and a half before it even became active. The orders were there in advance. That's not a prediction. It's just, hey, if it breaks here, we're expecting bullish momentum, and then we'll see how far it goes. So don't sit there and try to expect precision from the market. You're not going to get it. There is no precision. Only after the fact it looks precise. When you're in something, there's no precision. So in that situation, risk is the only thing you can control. Everything else, think of it as random. The profit targets are random. Maybe the market will go there, okay? Based on the previous structure, maybe it'll make that higher, blah, 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 and it'll go there, and I'll make my reward risk. That's it. That's the mentality you have to have, okay? No matter what time frame you're on. All right, so I'm going to leave you with that. Again, I hope you found this stream helpful. Again, I'm not a very popular YouTube person because I guess because I tell the truth and I give people realistic information rather than hope and dreams and all that other stuff that you find. But It doesn't matter to me. You know, I don't care if I have 15 people watching or 2 people watching. It really doesn't matter. You know, what matters to me is whoever is here is getting something out of it, right? That's really the main thing. I want this time to be valuable to you. So you come away and say, okay, I learned a little something here today. And that's great. You know, that's what I'm hoping for. Okay, so stop showing. Okay. You're the one that brought this. Is the guy that brought it up, right? Go forth and multiply is the one that brought up ASX. That's where I got it from. Okay, sorry about that. I won't bring it up anymore. It's just such a great example of something that, you know, does its own thing. But hey, I didn't talk about you, so anyway. But thanks a lot. I'm just messing around. But anyway, I'm just glad that people are getting something out of this. Like I said, it doesn't matter how many people I have watching. I just want you to be able to take something away from it, and the next time you're in a similar situation, you have a point of reference. Okay? So again, if you're interested in Greenbridge at all and you want to see what we do, all the links are in the description area below. I just have to tell you, we don't have lots and lots of trades, especially in this slow grind stimulus environment that we've been in. The trade ideas have been less and this and that. I don't put too many out. I don't like this environment, to be honest with you. So I don't put a lot out. Andrew's been putting some out, but you know, so if you do the free trial, maybe now is not a good time to do the free trial because you're not going to see a lot of action. We don't push a lot of action to begin with. We're not like that. We're very conservative, and you know, we put perspective out and stuff like that each day and give some things to consider. But I just want you to understand, this is not like one of those high action fake trade rooms where they just put out stuff because you're buying action and nothing else. Okay? More action does not make you more money. Some of the members here that are in the room, they know that, right? And they've learned that. We had members that have been following us for quite some time now, and it's really nice to see how they're putting trades together on their own. They're following our swing trade model basically, but they're kind of putting their own twist on it a bit. But they're much more confident and they have much more control. Where before, they even tell us, you know, they were more reactive and they would have reacted to something, whether it was news, some kind of candle on a chart, or whatever. Okay. What's Henry been putting out? Henry hasn't been putting out much. He's been busy with his house or something. So he hasn't been showing up to our show. He's been something with his house. I don't know. I don't know with these guys. So, but he'll be back next week, I think. And, you know, he'll have some ideas. But I know in this environment with these things pushing highs and highs and highs, and he gets cautious too. You know, he gets cautious. So sometimes, you know, sometimes he likes to stay flat as well. All right. So anyway, all right. So I'm going to leave you all with that. Again, I want to thank you all for taking the time here to spend it with me this Thursday afternoon. Wherever you are in the world, have a great day or a great evening, and thank you so much for watching.